and the global markets easing as investors assess the inflation outlook and interest rates in the United States and Europe. Meanwhile, the Johannesburg Stock Exchange ended a weaker month on a high, should I say. That's because the rand remains under pressure, though, and oil, on the other hand, it has lifted following the recent losses. Independent analyst, markets analyst, that is, Jimmy Moyaha, joining us now for a quick market update. Jimmy, good morning to you. Your expectations today in terms of trade at the local exchange following the continued mixed performance?
Good morning, Tony. Good morning to our viewers. Well, the market has opened quite bullishly. We are seeing that the top 40 is up almost 2%, so about 1.6% at this stage. We're seeing that the major driver there and the major leader there is resources, up about 1.7%. And that's probably off the back of the Chinese data that we have seen come out a couple of hours ago from the Chinese government around manufacturing data. The manufacturing data that's come out has reassured investors or re-injected an element of confidence that demand will return to where it should be. And that's what we're seeing in terms of early positivity. Emerging markets are likely to still fare better off in this space at this time. So on our front, the local currency or the local bourse is actually doing quite well in the morning, despite the fact that the rand, as you rightly mentioned, is still suffering from all of the external factors that it has to contend with and the local factors around load shedding and having been grey-listed towards the end of last week.
Sure. Let's focus the attention for a moment on the rand's performance. It's still under the spotlight, as you and I say this morning, and still under pressure from that strong U.S. dollar. What's the outlook, in your view, perhaps this week?
Well, I think from a US dollar perspective, there's certainly an area of concern given that the rands or the interest rates that we've seen increasing from South Africa as well as from the US Fed, that interest rate differential is now increased because South Africa is not keeping up with the pace of the US interest rate. So that's obviously going to provide a lot of strength towards the US dollar. But the factors that are hindering the rand at this stage and having it remain undervalued are local factors, in addition to things like dollar strength and things like pound strength. Despite the fact that last week we saw a fairly good budget delivery for South African markets and South African assets, from an economic standpoint, the other factors that have investors concerned and that have investors keeping the rand at elevated levels of weakness are factors like the grey listing, factors like not being able to have that energy security provided to investors and provided to businesses that operate within the South African environment. So there are unique factors that South Africa and only South Africa can resolve that will provide rand strength. And until we start to see some movement in those factors, it's unlikely that the rand will dip below 17 rand sustainably, or below 18 rand rather sustainably. We might see it potentially dip towards the 1750 mark if there is some signs of dollar weakness in the interim. But if you look at the performance of the rand against the dollar in particular last month, that was down more than 5%. It was down more than 2%, almost 3% against the pound, sitting above 22 rand against the pound, and that doesn't look like that's going to let up either. So from a rand perspective, the concerns that international investors are contending with are concerns that we have to address ourselves, and we need to address those in time for that to line up with international risk sentiment and international views of macroeconomic events that might be taking place around the world.
Yeah, let's focus the attention on other commodities, in particular the developments around oil, which has now lifted following the recent losses. Your outlook at the start of a new month?
Well, oil price was given a big boost this morning, as I said, by the Chinese data that came up, purchasing manufacturing index data that came out today, speaks to the return of demand in the Chinese economy. It's a leading indicator of where we can expect to see the Chinese demand come through from. And with that increase or resurgence in demand, we know that China is the world's largest importer of crude oil. And so a positive sign from their perspective in terms of the manufacturing sector rather being back bullish shows that or indicates that we can expect that their demand will start to increase, and that's probably why we're seeing that filter through to sentiment around our commodity space locally as well. Is that from a demand perspective, a lot of our commodities do end up going through towards China as well, from an export perspective as well. And so with this new manufacturing data that's come out, that level of positivity has given the oil prices a lot of strength and a lot of confidence at this stage. We're seeing that it's sitting in around just under $84 a barrel, which for the OPEC plus countries is towards the lower end of the midpoint of where they want to see it. I mean, we know that they want to see the oil price closer towards that $100 a barrel mark, but at this stage it might not be sustainable given that the demand drivers are going to be largely coming from China.
Let's talk company news. Sibanye reporting that its profits have halved in 2022. Tell us more as that miner counts the cost of the recent strike action.
Yeah, so Sibanye mentioned that despite the profits halving as a result of, as you mentioned, the striking and the flooding that took place in one of their mines, they did still report a strong position, a strong balance sheet, and their EBITDA for the year is still very positive. I mean, I spoke to the Sibanye CFO yesterday, and the CFO announced that this is the third strongest earnings before interest and tax number that they have reported. They are still on a big acquisition drive. We know that Sibanye has shown interest in some mines out of Australia. They're continuing to develop their nickel productions in their French operations as well as their lithium operations within Finland as well. So from an operations standpoint, the business isn't too concerned at this stage around where the profits levels are sitting. They believe that the investments that they're making from a capital expenditure point of view and from a restructuring point of view in terms of their investment portfolios are going to yield dividend going forward. But on that dividend yield, their previous results that they reported showed that they paid out a final dividend just shy of 8 billion rand, which worked out to about an annual yield on the stock of about 6%. So all in all, they are still remaining resilient in this difficult time. We know that PGMs in this time have taken quite a bit of a hit, and Sibanye, having been a diversified miner, has been able to weather that storm a lot better than most. The share price yesterday did take a bit of a hit, down more than 2%, but since early morning trade has since recovered, it's sitting up about 1.2, 1.3% at this stage.
Let's conclude the conversation with MultiChoice, which says it's partnering with Vumatel to boost the fiber offering. That's a positive news.
Absolutely. I mean, if you remember, MultiChoice started this, I think it was last year or October of 2021, if I'm not mistaken. And the initial partnership, we didn't really get an indication of where or who they were partnering with for this particular service. We know that now the expansion with Vumatel will allow MultiChoice to reach a wider audience, particularly with the increasing focus on streaming facilities. I mean, we know that this latest partnership of theirs has them giving a streaming box alongside this fiber offering, and the streaming box includes services like Showmax, like Netflix, and the like. And for MultiChoice, I think this pivot is quite important into the internet space and the digital streaming space, because we've seen that demand for that space has been growing. We've seen the likes of Disney Plus launch in South Africa as well, and we've seen that the demand for the traditional DStv bouquets that we saw packaged in the past, that has dwindled considerably given the cost of internet streaming. So for them to partner with a fiber provider to then provide fiber to then stream the services that you want is a good pivot for the business, and hopefully it'll serve them well in the future.
Jimmy Moyaha, thank you very much for that markets update, independent markets analyst there.